Good morning, everyone. This is Rose. Today is Monday, February 26, 9 a.m. Eastern Time. Okay. Okay, so the last week of month of February, we might get some volatility finally. We actually started last week, Thursday and Friday. You would know generally with the amount of the ATR points that is displayed on your 5-minute chart, and then the size of the bars moving up and down pretty fast. So hopefully this week is going to be a little better, so we could get some movement. Market has been, well, I want to talk about this. Last week I said, look at this area. It's also a threshold, and it's an important threshold. And as long as we stay within that threshold, okay, and not sell. Okay, so this was the threshold right here. And markets kept coming back to it after reaching the first target. Came back to the pullback zone. Buyers are entering, and many are selling because this right here is basically placed by the market makers, trying to make you believe that it's going to sell and test these lows. But most of the time, it's just to trap you into a trade, only to reverse it back up. So we went back to the swing target, but formed a double top and a lower high, and bears who sold selling again and breaking even right there, right? So, and then they even made a little bit of money. Maybe they sold here. So we went underneath that, a tiny little bit amount. And you can see that bears immediately took that bait and they are out. And once they're out of the markets, we're getting strong bull bars. So this was my second target, which market reached that target and then started to go sideways. Remember, this is a 30-minute chart. Market could continue to go and reach. This is my actual swing third target, and this is the one that I actually generally, if I'm in a swing, this is the one that I gear for. So I want to see market get to that target, and I've been saying that we have a projected target, which I have lost it, but it's around up here. So market could get to that. It's from 5150 to 5200 area. Now we have been up and up and up. Even last week we said market isn't always in long. It probably wants to make new highs, but let's take a look at the monthly chart. Monthly bar is pretty strong, testing the trading range highs. It's a very strong breakout bar. We could go a little bit up and then the pullback. If the buyers show up, that's great, but we could be also wanting to come down, because if this is a squeeze for market to get to even higher levels, generally buying here is never a good idea. Okay, so basically market makers make you believe that this is an amazing breakout, only happens to be a run of liquidity and then coming down, so they can actually trap you here. Market is due for a pullback, but the pullback, I think the bulls are getting ready to buy. So two things can happen here. We made a lower low and then here's the problem. Couldn't take that high. We took that high, came back and made a higher low, and now we're squeezing out. What seems like a squeeze out and a great buy may be deadly, because the pullback it's gonna trap the bulls, and then it's gonna start showing bear bars, and then the bears will start to sell, only to trap those bears either at or underneath the EMA. Then the actual squeeze can start. If that's the case, if the pullback is shallow and the bulls immediately start to buy at and around EMA or underneath the EMA, I would look for traps here. I would look for bear traps here. That means market then going back up could actually keep us in a sideways and up markets and a breakout for some time. So I don't know if this is going to turn into a squeeze. Here's how it would invalidate. If we start to get really strong bear bars, okay, and we start to move underneath this EMA, okay, and we do not show any kind of lower wick, or if the wicks are this long, that is not a bear trap. And then we get continuation, separation. Then the bulls show up, you do not buy that. Basically what that is once the separation, that's your EMA. Once the separation happens, I generally look for it. Okay, so we trapped the bulls here, and the market is really actually turning bearish here. So what you're going to do is anytime you get a bull bar, everybody's going to think that, oh yeah, we trapped the bears here. That's not trapped, that's just the bulls buying, okay, in this gap area and trying to get to an average price so they can exit out. And then suddenly you get another bear bar closing. We could come down and test these lows. Come down and test the low, we get a little bit of breakout, and the buyers will be there. That puts us into a trading range then. And I would find the 50% of the trading range, and I would look for move back to that 50%. So we don't have that yet. But why am I talking about it? Well, market has been up and up and up. I don't know what this is. I'm going to get rid of that. And market has been up and up and up, and we have a breakout. So deep pullback here. We have a leg 1 pullback, leg 2 pullback, leg 3 at the highs. And we're probably going to trap some bulls here. I just have to be ready, okay, if market wants to reverse. Obviously this is a monthly bar, but you know, price action is fractal. I'm applying what I know so far. So in order for me to really sell, I need to see bears printing consecutive bars, but that's not enough. We have to actually move underneath the EMA. On the weekly we have a trend line here, and we're overshooting the trend line, okay? And are we weakening here? I don't know, but every time you get a trend line break, I mean, we could be weakening this trend. So, but this right here is very strong, and a strong bull bar making a new high. So basically, we could be making new highs. So every pullback we could buy and continue to go higher. I don't want to say that we are bearish. And I mean, where is the bear bar then, right? Here's a breakout, beautiful follow through, pullback, and they bought that pullback. So I think the market wants to continue, but we are, think about it, we have a leg here, pullback, leg here, pullback, and we're kind of in the third leg. And that's just nested wedge. So then you have this going on here. Maybe 1 pullback, 2 pullback. That's already the third leg up. And then you have this wedge. So if we're going to top, we need to start seeing some bear bars. Maybe an inside bear bar. This week could be an inside bear bar. Or we need to move underneath this trend line. Okay. We need to get a bear bar that is taking out most of that bull body. Remember, this is a weekly chart. We need to see a couple of bear bars. So we still don't have that, and the market is still bullish. On the daily, just forget about this for a second. Let me get rid of that. Again, we have been bullish, right? But we went sideways on Friday. But is that good enough to sell? That's actually pretty strong, but there's still a gap here. So the bear's probably going to want to close this gap, and we are right now at 5102 or 3, 51.3, and the gap is around let's see, it's not so far away, like less than 10 points. So we could actually close this gap today, but only to buy again. Maybe we test this side, maybe we test this inside bar, this outside bar, inside bar area. That's why I marked it. If we start to come down, that's where we're going to test, but there's another gap here. As long as these gaps stay open, market can buy the shallow pullback. In order for bears to take control of the market, they have to show us right now consecutive bear bars on the daily chart and then move underneath the EMA. We still don't have that. But once we start to move underneath the EMA closing strong bear bars and gapping down, then I'm going to target the January 31st lows, highs, this bear bar range itself. Right there, we have the 50 EMA. Most likely, we could test the 50 EMA if bears get serious, but there will be a lot of bouncing happening as long as the 20 EMA is above. So the market is still very bullish. This right here could be exhaustion maybe, or possible pullback into this area because there were sellers there. So we may need to come down and give them an exit. So I'm going to put back this range. It's kind of important. So bears can test this range, but buyers are at the high of this bar that I marked, and then also the midpoint. So those buyers will try to stop the bears right around here, and we could still bounce or go sideways and up, retest of a trend high. So if you have a bullish trend, you could get a pullback, but that doesn't mean we're going to keep selling. Market will try to test those highs. If it tries once and tries twice and cannot get above, we'll most likely to come back down. That's what we need to do. So we could come down, go back up, test. If we cannot break, come down, and we start to take that out, and the first pullback, they're going to start selling. Okay, that's what I'm going to be looking for. So anytime you have a strong trend, whether it's a bear trend or bull trend, okay, could be minor pullback, and we would go back and test the high. For the bears, it's the same thing, could be minor, right? Tries, finally fails, and we come down and test it. Then we start to go back up. So then you look for strong bull bars, and you don't buy with full contract size. You wait for a pullback and then add more, and then now you're in a swing. So the similar thing for bears. So bears are not going to be selling this full force. They're going to see if the market goes back and tests but fails. Then we come down and take out that low, midpoint. Then they will add back majority of their contract sizes and then start a swing short. But until then, there's a lot of work. So we could go down, sideways and down, reverse back up, sideways and up. So market could put us into a much bigger trading range starting with this week. So I'm going to pay attention to these levels. If it's too much for you, remove it from your chart. The hourly is the way that I structure my hourly chart. This is RTH, so it's showing you the US weekly. Okay, so I take the last week's range always. So for this week level, so the last week's high, last week's mid, last week 33% pullback, 66% pullback, last week low are big deal. I have Friday, Thursday, Wednesday, Tuesday, and half day Monday, and we are 103. We're right around here. If we get above this, okay, this line with bull closes, we will go and test the last week's high. We might get a brief breakout, but that breakout could trap the bulls, and then we could start to come down. If that's the case, that's great. That means we have 1, 2, and possibly third push up to create a wedge top. And I would like to see market pulling back to this high, or to right here, overlap here, maybe overlap here, but look where that is. That's from the 33% pullback to the 50% pullback of last week's range. So this area becomes an important area. But I first would like to trap the bulls before I even start selling. Unless we break this green line, that means, okay, then I could sell into the EMA, but bulls are waiting at the EMA and they will try to defend this gap area open so they can go right back up. So that means even if we sell right now, pull back and come back down, remember there will be a gap there, gap right there, and the EMA, we could make a wedge bull flag and I'm going to look for strong bull closes, I will buy it, and then I'm going to look for a breakout, but that breakout could go up and then start to come down to here, maybe go sideways a little bit, and then come down and test right here. This is where I want a breakout to the upside. So I'll be watching this area with intent to see if I can buy the test of the EMA and underneath the EMA and trap the bears. And that could be the fact that it looks like a bear flag right now on the 30-minute is here. I'm sorry, I'm trying to say head and shoulders pattern. Could create a bear flag, and you can see the head and shoulders pattern on 1 hour. This is ETH though, so I'm looking to see what else is there, what else we could do, but it could get invalidated. So if we do come down here, we could invalidate, okay, bears, okay, and then continue to go up to this target. So that area is important from here to the 50 EMA. Even if we sell, I think the buyers are waiting here. Globex is 15-minute chart. Okay, so we had trap of the bulls and some kind of head and shoulders that we just saw on 1 hour, 30-minute, and the 15-minute chart. It's not all that a big range this morning. I'm sorry. It's actually, yeah, it's only 20-point range. Most likely it's going to extend another 20-point up or down. There is a undershoot, overshoot kind of a wedge here, but I don't like those. So generally I like to see trap and go and overshoot and then start to come down. That's what I like to see into here. There are probably buyers waiting there. So at the open, suddenly we could start to get bulls, test this area, and then come down, possibly. And you can see there's a double top. So this area, market may want to test before coming down. That would give us a nice wedge top, maybe 1, 2, 3, 1, 2, 3. So you can see right here 1, 2, and 3, or 1, 2, 3, and then the count begins with this bull bar. So I'm afraid if the bulls do show up, we might even do this, have another wedge, then start to come down. I would love to reverse that and swing it back into, first I would take profit at the Asia high, then I would have a runner into here, but this is where we would reverse. But this is where we would reverse. So structural breakouts, really nice. As we come down, there is a gap area, buyers waiting here. Most likely we're going to go up. We might go again. We'll see. Okay, after all that bullishness is major gap up, and market stayed sideways, but it's not bearish. It's just sideways. So what it can do is that it could dip and then start to go higher, and it will come back and then go again. If that creates a double top or wedge top, maybe 1, 2, and 3, then I will look to sell, but that hasn't really set up yet. So if at the open somehow we start to come down, buyers are here underneath these equal lows. You see that? So yesterday's low, or even 1 hour EMA, somewhere here they're waiting. Just trying to see if I can, yeah. So to me, this is the first defense, is buyers waiting there. So that is, mark that and see what happens when the price gets there. Yeah, I think we're going to be bouncing here pretty hard. And the next one could be all the way down here, but I wouldn't want that kind of a sell-off. But if we do start to sell and break this after bouncing, and then we break this level, say we come down, say we bounce, and then suddenly we break it, we're going to go and test there. Okay, buyers will be waiting there. We could make a double bottom and then go back up. That would put us into a bigger trading range. So if we do sell, I'm going to look for buyers underneath yesterday's low, a little bit further in this area. But if the bounce fails, then I'm going to look for this area to be broken. There's a tight trading range here. We may not get down here. First, we might actually bounce from here. So I'm going to mark this area. This is my area of interest. Trying to find tighter space. That makes sense. Yeah. Okay, so I have some safety nets here, but this is important to me. We will bounce here. Once we bounce, okay, I'm going to look for buyers and I'm going to buy with them. But this resistance holds. There's another tight trading range here. There's some here. I'm trying to combine with this one, that one, and right here. But I don't like space being extremely large, so I'm trying to find a heart of that. Here we go. Okay, that's better. We're inside right now. Market is deciding. Okay, so it's 5101. 5101. We're right here. So if we sell, we come down here. Then we buy and go back. If we cannot break above this, we're not going to go and test the high. We could start to come down into this area. Then I'll be selling. This is now, I want to see how market is going to handle this area. Okay. It's a tight balance zone. Market likes to stay in balance zones. It's where the bulls and the bears agree that price is fair and it's a good price. So they try to keep the contract sizes that price. But once we start get imbalance, meaning breakouts, first breakout could be failing. And then if you take that, it could suddenly reverse and you could be stuck in it. So just look for good confirmation. Similar level here at the low of the Globex range. Market is already pulling down. So bears really need to break this neckline. Trying to get as many touches as possible. So this is it. So bears need to really break this neckline in order to become bearish, but that's not enough. They not only need to break it, they also have to pull back and then start to sell. Okay, if they fail, then we go back, test this high and get another breakout. So that's kind of important. And that's right here. You see why that's important? See, if I need to anchor this, I can't anchor there, but I can anchor here. See why this is important? I'm going to anchor there. That's a micro double top. And then we broke out. Then I get those two double bottom and that bottom and bar 21. If market wants to come down here, hey, that's great. But we could trap those bears trying to sell. So I always look at the daily, is where we are on daily, what the daily looks like. Right now we have a strong bear, so if bulls want to buy, they have to test this really close strong, so we have to test underneath first, come down, and then go up. Okay, so we need to come down and then go up. And then I look at the hourly bars. How are the hourly bars there closing? Are we sideways? Are we breaking out? Remember this day I said this is going to keep going up and up, and if this bar closes a certain level, I'm going to keep buying and buying, keep adding. I'm in a long swing. Look at the daily bar, hourly bars, how they close, pretty strong. So it's kind of telling you where the market is going on the daily, whether you should be buying is every pullback to EMA, buying every pullback bars on the 5-minute, so and so. And that day was, I think, this right here. Yeah. So look how bullish we were. So, and then I look at the Globex. Globex range is kind of important. It also consolidates the patterns. So if I'm having a hard time seeing something on the 5-minute, I immediately glance at the 15-minute chart, and I already have a high and low, and I know this Asia is important. Because why is Asia important? Asia price action is always sideways. It's a contracting, okay, is most of the time some kind of a triangle trading range. It goes sideways, so that's your balance zone. And banks pay attention to the Asia because you have to find a level area of interest, and you have to see where the breakout came from. Is it to the upside of that range, or is it to the downside? Was it a breakout to upside and a trap and come down on the London session? So those are important, okay, see, we have stayed in the Asia sideways, right? So we expanded down a little bit, but sideways. Now look at that trap. And we didn't test its low, and we just went up, broke out of the Asia high, and then trapped and came down. But where are the bears? How come they're not taking out to 50% of Asia range? So that means bulls are still in charge, okay? That's just a pullback and a bull flag, and we're going to make a new high. So and that's what they're doing now. So here's a pullback. I like to see a little bit more down and test this area. We just tested a little bit there, but well, let's see how open is going to unfold. So I have close of yesterday, open of yesterday. I'm going to change that, remove this line. That's yesterday's high and yesterday's low. I have yesterday's high as always red because I see that as a resistance, and yesterday's low is always green. I see that as a support. So I try to see traps, bear traps here, bull traps there. Unless no bull traps or bear traps, that's how you get a breakout. Now, we have a gap. Gaps generally close early on, but we are open within the area of interest. That's why I said this is important, is how we're going to close. It's going to give you a lot of information. We have 10 o'clock news. We have new home sales at 10. 10:30 daily, Dallas Fed Manufacturing Survey come out. And we have a bunch of bill auctions. There is 6-month, 2-year at 11:30, 3-month bill auction, 5-year note auction at 1 o'clock. And that's about it. Tomorrow, big news items. Consumer confidence, durable goods starting at 8:30. Bunch of monthly bill auctions again. You got a money supply at 1 p.m. GDP is on Wednesday, 8:30. Big news. So then we have Fed speaking on Wednesday, and more Feds on Thursday, and so on. So ISM manufacturing, PMI, and consumer sentiment, all 10 o'clock on Friday. Friday is going to be pretty much very busy day. Good morning, Tim. Okay, so market is deciding. I have not made my decision to go long here. And in fact, we could actually suddenly reverse. and start to sell into here. So I'm looking to see what the market is going to do here, how they're going to close that bar. Bulls want to go in here and test this area on the Globex, and then I like to see if that's the case. That's great. Then we found buyers here. I no longer am interested. So we close a bull bar, then that's good. This is where the market is going to want to go. But the bar hasn't closed, so I can't really decide what to do. If I buy it right now and if it starts to collapse, I could be in trouble because there's a wedge here and we could get a double top lower high. Don't want to be stuck in that. But so far it's good if they can close this bar bullish enough. But I don't trust it. So I prefer to wait a little. But it's a trading range high, kind of. We made a high, we made a low. They're trying to take out this high 77. So you got a double top, double bottom. All we need is another bull bar. We get that bull bar, they're going to put the stop underneath 1. They might have already done so, buying above 1, and they're looking for the possible breakout. So hold on, let me see. So if this, but I don't do that. I wait for the second bull bar close before I do that, because if I buy it now, it could reverse back down. I want my confirmation. So if they've already bought, stop under 1, and if this is the trading range, you could say double top, double bottom, then extend it. So I'm going to take this. This is where they're trying to go, to 51.22 for bulls. Only if we get another bull bar, possibly. But are we going to get it? That's the thing. Because if we don't get it, then the bears will try to take out the bar 1 low. Then they know there are stops there already. Bulls try and close a bull bar, but why is it taking so long? Because it's trading range. Within a trading range. And bears see a double top, lower high bear flag. So they're trying to prevent the breakout. This is why I didn't buy above bar 1. I want to see the confirmation. Okay. So no confirmation. This is one of the reasons why I'm glad I didn't buy it above bar 1. That doesn't mean the bulls may not show up, but this is bar 2 is not a strong bear bar either. At one point it was, but bulls pushed the body up. It closed on its mid-level though, so it's still semi-good, decent bar for bears, but it really should have been closing a little bit lower. Then I would have put a sell order underneath that bar. So it's a doji, but it also is prevented bulls from closing a bull bar. Because if it was a bull bar, bulls would have already entering their buy stop orders 1 tick above bar 2, if they haven't entered with bar 1. So those who entered with bar 1 high, they are buying this pullback and they're trying to break even. So they're trying to get back to the bar 1 high. And if this bar 3 goes to bar 1 high and then collapses, you know those bulls are exiting and the market suddenly could come down. So that's something that you learn in time, is this is why bar by bar reading is, I think, very important, especially for futures, like if you're trying to trade S&P, NASDAQ. I mean, because losses can add up so fast on futures, and if you don't have a good grip on bar by bar reading, you're not going to make money in futures. I've dealt with that. I've been nothing but a pattern trader before. Then I quickly realized I can't do that. I can't take these. Look what's happening here. Big losses, big pullbacks. My account can't handle it. But I'm really good at pattern reading, so that's good. So I see that I'm really good at it. I'm not talking about now, but I'm talking about past. I see that I'm accurate in my reading, but there's something that I'm missing that causing me to take profit, but I'm actually accurate reading the price action. See where I'm going with this? Pattern reading is not enough. Pattern recognition is very important. But what happens within the patterns is within the micro level, which is the bars. So you really have to also get good at reading the bars. So if you have a big account, you can hold pullbacks. You can swing, say you're swinging and this pulls back, but your stop is down here. That means you have a big account. You're not a regular, retail trader. You could be a retail trader, but you're one of those that has, big accounts. So I'm talking about the people with small accounts that cannot handle such a thing. So you see what happened there? Market is now coming to the 50% of this area. And if they start to close bear bars, I said bears know those stops are underneath bar 1 now, because those bulls bought way too early, in my opinion. So they're trying to run. Look, they already came down and tested 1 tick under bar 1, and they're already making bulls afraid. Some of them are already exiting out before it reaches the bar 1 low. That's why you get the bar 3 large accelerated. It kind of fueled the bears, but now we're at the 50% of this area of interest. If we start to close another bear bar, we could get we could close this gap. We could test the close of yesterday, but we'll see. We're still at the 50% of, so we're still bullish slightly, but if bears close below that, then we're definitely gonna come down more. Gap means bullish pressure, so it aligns well with the 50% of the area of interest. That means there are buyers here trying to prevent, because those stops could be down here. So they know is these unsuspecting retail traders are being liquidated there. So, but the stronger bulls, they have their stops down here, maybe underneath 21. They're trying to hold this line. So they're trying to block the bears there. That's why we're stalling there. Bears moved the market more than 5 points, so they want 10 points out of this, 9 or 10. Not 50.99 is 9 points, 50.98 is 10 points. So I'm looking for a little bit more follow through. Maybe a test of 50.99 at the minimum, but 50.98 is doable. So I sold underneath 3 and I scalped, and I'm holding a runner into 98 and I just took it. So I just scalped that one as well. So that's a 10-point solid. Bears don't need to stop here. They can continue testing, moving underneath the close of yesterday. They closed the gap, but it is a 10-point, so it's going to bounce a little bit. See how that worked out for me? I waited patiently. Just because bar 1, was a really nice bar. I've seen this song and dance so long, and I've been trapped up here so many times that I know, okay, maybe not do that anymore. So because I know what they're doing there, and you get a double top neckline. They want to test the neckline 79. They want to get a breakout to here. So I made really nice selling underneath 3 and scalping quickly right there at the 10 point and I did very well there. I don't have to trade rest of the day. This was the filtered trade that I took, and that's how you should be, right? So if you're able to make first 10 minutes of the market open is not even, 10, just about 10 minutes, that's 2 bars, more than $500. You figured it out. You figured out how the open works and what not to do, and you can take a quick trade, which can turn into a swing, by the way, as long as we break that close of yesterday. So I mean, I had to wait, and waiting is part of the biggest part of this game. This is not a game. I don't want to keep calling it a game. This is a profession. Everybody get this out of your heads that this is a game. There's no game. There's no play with money. Okay, we're not trading with candy. We're trading with money. your hard-earned money that you're supposed to safeguard. Your number one job is not to open a trade. This is serious. You have to exhaust your ideas why you shouldn't be opening trade, then you can open a trade. So I didn't want to be click happy with bar one, and I have a rule, right? What is my rule? Let me show you guys. I have this thing. Hold on. It's on my, if you want to take a screenshot, and I can also post it on Discord too, but it's on my other computer. So let me open the Discord there and post some charts. It's going to make such sense. Once I see failure of failure, right? This is an expanding triangle, but higher, okay, longer term trend is kind of bearish. And what this was a bull rally. Bears are trying to resume the trend, okay? So if you think of this, I don't know what's on the left. I don't care. But I see this, there's some kind of a bear trend, except that they couldn't maintain. So this is bears rallying, okay, is not bulls. So that means this is going to try to resume some point. If that resumption of the bear trend fails, then I'll look into buying. Okay, so what I needed here for bulls is another bull bar. Market is going sideways, expanding down, trap, expanding up. If this is going to give me a breakout, that's great. But where is the second bull bar so I can buy above it? It's not there. Then I see bar 3. I'm going to put a sell stop order, and I'm going to count. And that's going to give me, from this pivot level, okay, about 10 points and an extra tick to cover everybody's commissions, 10-point swing. So let me show you something that I've been sharing with people who've been asking and want to learn about it. So once you like tattoo this in your brain, this pattern, it happens almost all the time, like every half hour, every hour, every like every 6 bars, every 12 bars, every 24 bars. I just need to find it now, so give me a second. I found one of them, but I think I deleted the rest, which is kind of sad, because there were 2, but this should give you an idea. There we go. So basically what I'm looking for is this. Okay, so here's, I'm looking for a low volatility area, which is a sideways price action. Okay, so that's what I'm looking for. So in order for me to get a breakout, I needed this bar to be bull bar. Instead, we got 2 bars. Now, we're smack in the middle. I still am not convinced to sell it. But then I get this. Okay, now I have 3. Maybe I can sell right underneath. Stop above. I'm going for a 1-to-1. Okay, so that's basically your extension. But you still have to look left because you're selling into support. Okay, so even a similar thing here. Double top. Look, going sideways. It's going to make double tops and double buys. And think of L's barbed wire, right? Tight trading range. It's going to give you a high and a low and a traps, right? So no consecutive bear bars, I cannot sell. No consecutive bull bars, I cannot buy. If I buy above this bar, I'm going to get trapped. Don't do it, because your stop is going to be here or here, and the bears know it. They're going to come and get you. Now I see 2 bear bars. I can sell as early as underneath with a stop there. I can go for a 1-to-1, and I can go for a 2-to-1. Or now I have a bigger sell signal bar. I can sell, put my stop there, and I can go for a 1-to-1. You see how that worked out? Okay, I'm flat, but now I'm interested in taking another trade. So for bears, we could not take out those lows. We tested the close of yesterday. We're bouncing. That was a 10-point. Can the bulls actually break out again? I need to see more bars. Now, the sentiment, though, who's in charge? If you look at the bar 3 and 4, who's in charge right now? If you look at the 3 and 4, who's in charge? bar 3 and 4 on the actual today's chart, not the chart I posted. It's bears, right? Bears are in charge. Why? Because this bar was 1 point a bear bar. It closed bearish, but it's a weak bear. Because it's weakened bear, although they're still in charge, what do you think those bears are going to do? Do you think they're going to exit out of the market immediately and the bulls are going to buy? No. This is still a bear bar. So what does this mean? That means limit bears will immediately sell at the high of bar 4, try to break even somewhere in between. Okay? So that's what's happening. So they're not going to let the bulls take over the market very quickly. Therefore, you're going to get sideways price action. So those limit bears are selling right now. They don't want to just break even. They want to continue to get another leg. So that means what they need to do is there was a pressure here, bullish pressure, push the market up, push the bar up. The body closed above its midpoint. Where do you think that the bears need to go and close a bear bar to eliminate that bull pressure? To the 50% of that pin bar. If the bears actually take out the 50%, then they can sell. But if they fail, that's the second try bears failing and the bulls will take over. So you have to watch this and see what's happening before you decide to take a trade. Actually, bar 1 was a bull trap, in my opinion, Roy. Now, why? Because you're in a trading range. Remember what Al says? If you're in a trading range, what are the deadliest bars in a trading range? This is the 50%. Suddenly you get a big bull bar closing on its high, such as bar 76, such as bar 1. What do you think is happening there? Bear machines know that this is designed to trap you. They're going to sell. If they're making 2-point scalp, chances are they will want more than that. So that's what they got. So that therefore they actually had a grip on the control of the market with 3 and 4. Hello, Zido. Welcome back. Good to have you. So limit bear sold above bar 4, and they're trying to test the midpoint of is 4, bar 4. So is how they close a bar is important. If they fail to close a bear bar, then we'll reverse right back up again. It's a triangle now. So you have a triangle needs a third test. You have a triangle needs a third test to the low. So you're smack in the middle of it. It's not yet decided. So you're right at the apex. And we have news coming up in less than a minute. Be careful. New home sales. And then the 10:30 is Dallas Fed manufacturing. Back to back. Okay, news coming up with the close of bar 6. See what's going on there is now bulls may have both the close of that bar or both underneath bar 1. Or maybe both underneath 2. They're trying to get back to the bar 2 low. But I would not touch this. You need to see bull bars before you even try to buy anything. Bears trying to resume the trend. They want to test probably the 4 low or the trend line. Bulls want to go back up to the bar 2 low. They might have both underneath there. You see how bar 3 ended up opening high, went up a little bit, and then came down. So, but if this bar closes bearish, could be a point of no return for bulls. And then they start to exit out fast. We could get a breakout. And how would you know a triangle breakouts are solid breakouts, that they're not going to 50% chance of reversing back to the apex again? How would you know? If the bar closes with a strong bear close, way underneath the trend line, closes something like this, with almost no wick or maybe a one tiny thick wick, that doesn't count. This is going to get a follow-through selling. So that's what you want to see. But you get a bar with a mile long lower wick, that's not good. It's probably going to want to reverse at the minimum back to the lower trend line or to the apex. All right, we're sort of kind of at the 50% of that bar 4 is, I kind of would say, yeah, we are. But that bar closes below its midpoint. We're going to come down and test the low of bar 4. If we fail, then the bulls can come in. Because they bought underneath 2, is they probably want to get back to too low. So I'm still flat. I don't plan on giving back on what I made earlier. Could this be actually a triangle with this high and we have already 3 touches? Then this is I have to also redraw this one. So now I could say okay, so this is a triangle and it's finally looking for a breakout point because it already has 3 touches to the up and to the down. So it's 1, 2, 1, 2, 3, 4, 5. Maybe that's 1, 2, 3, 4, 5, 6. And we're going to finally break out. Early support. This is support. Now my support is always blue. But it's weak. We can actually break it. Market wants to come down and test the 21. Close to the low area. Bear's trying to close a bear bar here. 55 more seconds. We'll know. See that 50% of bar 4 holding? Still, I don't have a bear close. Because it's been tested. Maybe even, I can even say this that should be, look, tested, try to get a swing fail. Test it, try to get a swing fail. But to me, I don't like to do that. This is the support. So this is now, I can say, I don't know if I'm true to that. Maybe 1, 2. We might come back and test it, but it may not hold. So if you actually take the whole thing, I don't know if you guys can see it. We bounced twice and failed. Twice it bounced from a support. It's every time we go test it, we weaken the support. So this time they could actually break it to the downside. So, but no bear bar. So bulls now is both. Where are they trying to go? They're trying to go at the minimum to too low. And possibly, if they can close a bull bar, then they can go higher, but they have to close above open of the day to become bullish again. And if they fail, that means these bulls bought here came as close as possible to too low. Maybe they bought 1 tick underneath bar 2. That would be 0425. Look, we just tested 0425. So exactly where they bought, they went back to it. Now this bar now closes bearish. Maybe we get another chance to come in here, but I don't know. It's sideways. I'm not touching it. I'm not touching it. It's in a breakout mode right now. It's gonna get a breakout soon from somewhere. I want 2 consecutive bull bars and a break of that is upper trend line. We're stuck in a 10-point range here. If you bought it though, that would have been high 1. That would have been high 2 above bar 7. But you're in a tight trading range. and it's squeezing. If you bought it above bar 7, that's fine, but you still have to scalp, okay? And then hold a runner for 10 point perhaps, but it's not guaranteed. Bulls are still struggling here to break even. So they kind of did break even here, and finally made money by buying underneath 2 maybe earlier. So we came back again. They bought at the lows, came back again. Now they have to close bull bars. If they do, that's great. I want to see some bull pressure. But machines already entered above 7. So it's because it's the second try failed. Now, if I do buy, I'll just, for shits and giggles, sorry, excuse me, I use that a lot in regular life. I shouldn't be using here, but I'm just gonna buy with one contract. But and let's see. Okay, I just bought with one contract. I'm gonna have to get that out of the video part. Okay. Let's see if we can actually go and test bar 1 high. But if it fails, I'm gonna have to be forced to exit out. So I just actually bought with one contract. So the target will be 1 tick above bar 1 for me to scalp. And I'm basing this decision only on seeing the high 2 above bar 7. But the problem here is that you're buying against 2 bear bars here, 3 and 2. Okay, strong is especially 3. So it could actually sell. Okay. If this bar closes bearish, I'm going to have to reverse it. Either reverse it or buy lower or do something to exit out of this. Sorry about that. There's some bulls buying here. They're not happy with the bar coming down that much. It's a scalp mode. It's not a swing mode yet. Bulls trying to hold the 50% of this area of interest. They're trying to keep the market above it so they can break out to the upside. But it's not yet decided. Slightly more bullish than bearish. But we have to get above the EMA. I'm sorry, open of the day, not EMA. We do have to stay above EMA. We need another bar, 2 consecutive bull bars. Then that's a sign of more bullishness. But also staying above open of the day is good. So bulls are still pushing, but it's really not yet decided. Bulls need a second bull bar. Then they will buy above that bar if we get another bull bar, and they will look for a breakout. If they fail, is meaning they don't see the bull bar, and we take out the 50% of this area of interest. We're going to come down and test the bar 4 low, possibly even 79, and somewhere down here. So it hasn't really decided. Here we go. That trend line and the 4 low is target. Market wants to come down and probably test around. If they can get a breakout, test around 50.93 to 90 area. Somewhere 21, 22 low from yesterday, but we need follow through bear bars here. I'm out of that long, by the way. I had to buy here, exit, sell again, and then sold some more and scalped a little. I'm holding a runner, and I want to see more bears. pushing this down to 50.95, 50.93, 50.92 area. Boring open, but I'm able to make some here with patience. Here we go. Let's go. Let's break this trend line. We're getting a measured move down. Is if we take this low right here or here, that's the 1-to-1 target, 97.50. We just tested the trend line, but no break, so it's bouncing. But 97.50 is bear target. But you see why it's stalling, because selling underneath 8 is not good. It's not a good signal bar. When the signal bar is not all that good, even 1-to-1 is a problem. It's a hassle. But that's what they want, and then you have the trend line, so that doesn't make it any easy. I don't like it when sell signal bars are not bear bars and they're bull bars like that. I always wonder, should I be scalping early and not even worrying about the 1-to-1? Because we may not get it. But if you were to sell underneath 7.7, you get 2-to-1. See? 1 and 2. Look, you sell underneath this bar. 1-to-1. Breaks down, 2-to-1, breaks down, 3-to-1, breaks down, 4-to-1 before going up. And this is even an okay sell. You get 1, 2, 3-to-1, right? So you have to think of, what you're buying and selling, whether you're selling underneath a good, strong sell signal bar or a weak one. Are you gonna even able to get 1-to-1? And they are struggling right now. So I scalped is right around there at the low, closer to the low. And I had another runner, but that didn't work. So I'm wondering if we can sell this doji and I can break even. But I don't like the way the bar 10 is. But I wouldn't want to buy above bar 10 is due to bar 9. And I also know that the bears are stuck because they want to test underneath bar 4. So they're selling, and they're going to try to get their 1-to-1 probably. So I just sold there, got a break even. If we fail one more time here at the 50% of the pin bar, then I will exit out with that runner. I will reverse it and make the money to the upside. This is the last chance for bears. 50% of that pin bar is still holding. Bulls know if they allow bears breach that, it could even go to all the way down to, like I said, 93 area. But if they can stop it, then it's done. But it's not yet. It's not a good buy, in my opinion. There's nothing, how do I say that, like demand in there. It's showing some signs now, because there were probably buyers underneath there, and then suddenly this bar opened up so high, stuck, so it's going back to bar 8 low. But will the bulls hold it, or are they going to take the bait and exit out and be done with it, and then we can finally come down? And here's is also double top neckline. We haven't taken out that neckline, so we're still slightly more bullish than bearish, even though we are underneath open of the day. It's just failing every step of the way. So I am left with scalping. That's all I have. Bulls want to get back up to here, but they have to close this bar bullish. And if they close the bar above this blue line, that's done. We're going to go higher. So you see how that failed, selling underneath, not so good sell signal bar? They're buying at the low of a trading range. They're fixing is they want to get all the way back up to bar 1 high. Because bears tried once, bears tried twice. Now this bar needs to close above open of the day to say, okay, we're bullish. We're going to go and test the bar 1 high now. And we have slightly looking like an inverse head and shoulders, but where are those bars? Bar 10 is nice, but the body is too small, so I didn't want to buy above it. Buying a weak bull bar, it's still a bull bar. It even weakened the bears because this breakout bar, kind of a breakout bar, but didn't get a follow through. But this could be also a small breakout pullback, and the bears can also show up right here, right now. Because they have closed the bar 9 below the 50% of this balance zone. So it could be just, because it's a limit order market, it's trying to rescue the other side. It's a two-sided trading until it breaks out. So I'm going to hold on to this short. Just one contract. But if they finally fail, I will exit. It was 2, so I reduced to 1. Well, I did get the breakout. This was me trading, so which was kind of fun, right? So I could, and then and I think, yeah, Brad came in around here on Friday. And then Thursday, I had a breakout, which was great. I think I was on Thursday, I don't remember. So it's a mixed bag of tight trading ranges and breakouts. But thanks for the, what is the word I'm looking for? Compassion. No, it's not the word, but you're close. What is the word? Sympathy. Sympathy. It's a tight triangle. We're still squeezing inside. We need to break out up or down. Slightly bullish, but it could change in a second. So bulls tried once, bears tried once, that's 2. Bulls tried again, 3, bears tried 4, 5. So 5 reversal. Sometimes you have to wait for 5 reversals before breakout shows up. So we have 1 minute left for Dallas Fed manufacturing reports to come out. That could act as a catalyst. Remember, 5 more reversals could start a swing anytime. There is a slide. Let me see if I can post it. Back to making money with that contract, but I need a bear close here. Get that, I will add another contract to sell into 93 area. Maybe a little lower since low of yesterday is right there, that green line, but no breakout. So no breakout. Can this suddenly reverse back up? That would be the 5th reversal. So up, so here like this. 1, 2, 3, 4, 5. 5 or more. We could suddenly get a breakout, or we're just going to break down. I prefer breakdown. I like this area to be tested, but just want to see where this bar is going to close. If they start to show me some really good bull bars, then I will exit out. and I will actually reverse it while the loss is small with the last contracts, and I will double and triple that contract size to the upside, and I will start making money with a swing like the first one on that chart. So here, let me show you. We're under the EMA. We could get this. Those are coffee stains. The last time Apple did the best of her work, and I still can't believe my laptop is still working. Twice I dropped coffee on it, and it was just soaked, and still works like a charm. Asus gaming machine, one of those rogue ones. I mean, I even got in there with knives. I use knives to pry open the back, move things around. I mean, I abuse this thing, and it's still working. Nothing. Even it was still soaked, it was just working. I was still trading. Nothing happened. So I mean, I don't know how they built these machines, but they are beasts. They're like rose proof. I mean, it's rose proof just because she will dump something on it hot. Let me see the encyclopedia. Okay, so if this bar closes like this, that's good news for bulls, because bears tried once, bears tried twice, failed. We go back to the apex of the triangle, and then suddenly we could start to get bull bars. Okay, so watch out. Some bears will sell at the high of 13, but they could just break even and exit out. So I still need 2 bull bars, but this is a really nice bar for bulls as far as I'm concerned, and high 1, high 2, and then we come down, maybe high 1, high 2. Could be trying to get a high 3 from the lows. It had to come down and enter the bears with a better price, which is good. Limit bears already entered. I did say that we're gonna test the 4 low, which we did, but is no breakout. But how many times the bulls are trying? They have been getting good prices to enter, but not able to go up. So now, if they can close a bull bar, then that's good news. We could go and test the bar 8 high. That will be double bottom neckline 8 high, and then we start to get bull breakout. That would be wonderful. So here's example, and we have double bottom. We need bulls to show up, so that's a double bottom. We need bulls to show up and start closing above EMA. Neckline, we take out the neckline, we get a measured move to upside. So we need this bar to close bullish for bulls. But be careful, think of that bullishness as a gap up. Okay, here, small gap. And then we come down and test at and below EMA. We cannot take out those highs, then swing will begin, but which side I don't know yet. It's slightly more bullish than bearish. More bullish than bearish. Kind of disappointing that they couldn't break out. But they could still sell into here. But I don't care to keep it anymore. It is a major support here. Eventually market, if it starts to sell, will test there and this trend line, this green area as well, but We get a bull bar. We're going to go and test this upper trend line, and we could squeeze right out. So bulls need a bull bar here. If they fail, then we can think of coming down. But 13 is a beautiful bar. Buyers already started to buy one tick above. They are looking to test these highs, possibly 77 high even, but it's just so sideways. What happens? They close a bear bar here. Well, if you entered one tick above 13, you would be entered 0225. Market went up to 0350 to give you a solid, actual 0375 solid point, but that was nothing but a scalp. So now look what's happening. Failed. They closed finally another bear bar. They're still trying to sell. But what happens to the bulls who entered above 13? They're going to try to buy here. They're going to try to break even. So if they got a 1 point, but they probably entered with multiple contracts. So if they only grab the 1 point there and they have a runner and they don't want their stops to get hit, so they buy at the lower third of 13 and they try to break even somewhere in the middle or minimize the loss at least. So how will this bar close? So anybody entered above and filled 0275, they enter at the lower third, they already are breaking even, kind of. Maybe not yet. They are now. So look, you enter one tick above, so 0225, lower third approximately. You know what, I'm going to do this the right way, just to prove my point. If I measure this bar, this is the lower third starting point, right? So right there, if you entered one tick above 0225, you enter again. Actually, we did not break even just yet, so get rid of this. Seriously, okay? They did now. See, that's the average price, but they want to get back to the 13 high, one tick above. Then their original contract will start making money. That will be even better news. If they can actually close a bull bar where I'm pointing, that's good for the bulls. Okay, that could be small inverse head and shoulders, but failing to close a bull bar, we could then have bulls exit out and the bears could sell into this red line, would be their target at the minimum. So I have to wait for the close of this bar to determine that. It's just a back and forth market with 1 or 2 scalps, or max 9 to 10 point swing, and that's all there is to it. It will bust out from somewhere. Could be from downside, but I just want to see where this bar is going to close first. Do we have always in short started already with 2 and 3? Possibly, yes. We're now separating from the EMA. This bar closes bearish. We can finally say we have a breakout, and we're going to come down and say we're going to test 79 low, possibly is somewhere right here. So I would say somewhere in this area they could, but I don't have that information yet. We could still close this bar above that average price level I marked earlier. And if bulls do that in about 55 seconds, then they're going to gun it and they're going to try to get back to 0625 to 0725 area up above. It's very painful this morning, let me tell you. But it doesn't really look good so far for bulls, but that could change any second. think of this as a trading range, and this is the low of the trading range. Buyers have been there, except that they're not getting any follow through. Bears see that, but 5 or more reversals, 1, 2, 3, 4, 5. This is the more part, which is 6, is trying to reverse down. Is it going to now expand out, or is it going to fail? And we're going to get that top left example on the chart that I posted. Yeah, it is kind of a barbed wire. It's a tight trading range. The barbed wire, that term is no longer used, but it is barbed wire. So it's basically a tight trading range. So you just have to give room to bears and the bulls test highs and the lows before they get a breakout. Okay, let's get these bulls in the market. 15 didn't really close where I wanted to close, and that kind of makes it difficult for bulls, but still this is support. We're still testing. So if we get a bull bar, it'll be fantastic. So bears tried once, failed, bull bar. Bears are trying twice. We get a bull bar now. So that'll be good. So, but we get a bear bar, I'll be making money again. I mean, I could exit out of this if bulls show up, but bears are trying to break out. Because that bar 15 didn't close a bull body, one tick above that average price, so bears trying their best here. But they have to not only just close the bear bar, they also have to break out from that trend line. It's failure to break out for the second time. This is it. Then we get a bull bar. I'll reverse that lightning speeds, and I will add a bunch of contracts for bulls to bring the price back up to the 8 high. Is higher than the 8 high, maybe like a couple of ticks higher. But that's where I'm going to target at the minimum. And I'm going to scalp there is if bulls show up. And I'm going to leave a runner for final breakout, bullish breakout. But if they fail, right now, right here, the bears will take over and they're going to bring market down to 50.92. I'm sorry, 93.92 area. So fight is on. What does it look like on a 30-minute? It's kind of bearish. You see 4 bear bars. Leg 1, pull back, leg 2, pull back, maybe leg 3. Bears want to bring market down to here. Or here. But we're still in a support. Still, market hasn't really decided. Could still. They got their 1-to-1, but barely. So if market breaks this 1-to-1 target, we're going to come in middle and then 93 area. I'm back to making money. Wow. I was just trying to scalp a little, and then I was going to leave a runner. It's like, here, take your money and leave. Okay. I couldn't react fast. I was just about to pull my target further down, and I was like, okay, so I want to add a little bit more contract. I added more contract, and then it changed the size of the target, and then I was trying to pull it down. Just kicked me out of my trade. Positive. But it's like, I hate it when market is like in a rush to get you out. Here, take your money, get out. It's like throwing money, and then we don't want you in making money. But anyway, it's a good thing. It came very close to that. Because I'm not snapping, it's kind of tested there already. So you should always like one tick. It is the 95.50. See, if you cannot go beyond it, that's all you're getting. This bar now closes bullish. We go back to this trend line. Okay, we're testing this trend line. Can we still sell? I mean, I don't know at this point. I'm flat right now. it could still sell. It still wants to come down to 94, 93, 92 area, but we need to get a rejection right here, is come back down to here, break below, and then continue to sell into this area. So if anybody who sold underneath the breakout bar 16, sitting through the pullback and then selling higher, and they want to follow through, and they want to make money. So that's why at the open or the upper third of 16, limit bears are waiting to add to their positions there, and then push this back to where it bounced, and they want to see bar breach underneath that midpoint and then get to the 2-to-1 target. But you see how difficult it is because the sell signal bar was a mess. And we're having this mess because of that. So now limit bears sold above and they're now trying to come down further. Okay. A lot of bears trapped underneath 16, but that's what you get trying to sell inside a support, inside a support, support inside a support. Okay, is you always have to counterfact okay, there's a breakout bar, but what about the pullback? If I sell it right now, can I be stuck in a pullback? I'm trying to sell. I'm trying to get out of a condition that has been in a limit order market condition. With the first bear bar I see, what are my probabilities for getting a clean breakout? Probably less than 50% is, right? So probably it's going to go up, right? First, because market likes to go back into something. It's like you're leaving your house, danger outside, danger, you're selling into support. Most likely you're going to return to the house, right? There's a whole battlefield going on out there. Who wants to be hanging out and having a tea? Get back in the house. So that's what they're trying to do. But there will be sellers there because they know they're stuck, so they're going to sell up here. Price came down. If they're exited right there, this bar is going to close, bar 17 is going to close bullish. Then you can say, okay, I see what happened there. These bears are not able to, get a follow through. This is now time for me to exit out because they kind of already sold up here, moved the market down, and then the bar closed bullish. That's when you decide you exhausted your chances and these bears are not going to go further. But the bar hasn't closed, so we don't know. There's still 17 seconds, so last second this bar can close on its low or close below its midpoint. That would be great. Then we're going to get a follow through selling. You can use this. I mean, you would put your stop up here. That means you have a 3-to-1 target. Because market went up with two legs, leg one, pull back, leg two. So I started from there. You don't have to. You can certainly look. We have a breakout bar from the 2-to-1. So we know they're trying to come down to the 3-to-1. So if you actually measure half of 2-to-3, look where we reversed. Either or, it doesn't matter. It's the same thing. It's still making its way down. Bears need to take out the midpoint right here to get a 3-to-1. So you're still swinging this down, but leg one, leg two, leg three. So those half reward is kind of important. I always want to see what's happening there. That's why if I'm extended something, I'm going to take profit somewhere in the middle because it may not go through. Bears want to get a follow through here, but where are the sellers? Okay, maybe right here. Target is still 94 to 92 area below, or I would say 93. Could still come down. Good, so we're selling now. It's probably the target. Or from here, that's your target. Now, anybody sold underneath 16 making money, underneath 15 making money? Or double top, double bottom, double top, double bottom. You can also get a measured move. I'm going to take that. market can sell all the way down here. But I think I'm trying to see. Yeah, this is just about right, but you can also go conservative. Exclude the wicks. Somewhere here, this market keeps selling into. They're trying to break this resist support, so they're trying to come down and test the 21 low. I'm going to scalp around 94. Came so close, but didn't give me anything there. I wanted bears to do better and test the 90, 94, and then go down to 93. 93 is basically just about 15-point swing down. So I'm waiting for bears to deliver the 14 to 15-point average. They already got 13 plus, but it's not clean enough, so I'm going to wait a little bit. So we could test that 93, maybe a little bit lower, I don't know. I'm prepared to take profit there. Okay. 94, I'm going to scalp, and then I'm going to leave a runner into a little bit lower than 93. Low of yesterday is also magnet, which is this green line. What is that? That is 92.25. Slowly making our way down. Low of yesterday's magnet, so I'm about to take some money off the table. Hopefully they can test this 94 or 93. But if we get a micro double bottom, I'll exit because I don't like micro double bottoms. Considering how many times we have pushed leg 1, leg 2, complex leg 2, and leg 3. So that micro double bottom could be problematic here. But I don't want to panic. It is support. But this bar closes bullish. That's also going to be an inside bar, and a clean close without any kind of upper wick can attract more buyers, and the bears will exit above that bar. So what I've done, I scalped more, and I only left the runner. I'm still keeping the runner right at the low of yesterday. But if this bar closes is very bullish, I'm going to be forced to exit. So I have to wait for a bar to close before I make any determination. But just to keep the risk small, I scalped 90% of whatever I sold and only keeping one contract, which is not ideal because it's probably going to come down and test the 94 and say, hey, dummy, you just acted too fast. See, it's coming down now. All right, I'm going to sell one more contract. Fine. Let's come down to 94 and then get a follow through into 92.25, 92.50. Low of yesterday's magnet, which is 92.50, it seems. I might be wrong. Oh, yeah, I am wrong. Wait, yep. So 92.50 is low of yesterday. Two consecutive bear bars closed below the EMA with 3 and 4. It's kind of always in short there anyway. Or always in short, already started with 2 and 3s. I was able to make money here going short. Once the market makes 10 point to one side, depending, so you're going to have to measure, they couldn't make 9 point at the minimum to the upside. So trend is to the downside. So yes, it is always in short. So I'm making money selling rather than making money buying. So it proves that we are always in short. I like to see market come down and test 94, 93, 92 area before bouncing. But if we do break that, we could sell even more. Remember I said earlier on the Globex chart pre-markets, I said I'm looking for buyers around here. Those buyers showed up with this bar and we went up, but we could not go and test the Globex side, nor we were able to break above it. So market comes down. And I say if we start to come down, we have to fill this gap. And where do we go? We're going to test these lows, the 50% of Asia, which is right here. And we could actually breach somewhere in here, okay, before reversing back up. So I think that's what the market is trying to do. With that in mind, I started to sell. Scalped, held a runner just in case we could get a follow through. Bulls never showed up, so I kept adding as it went down and scalping, adding, scalping. So now I have 2 contracts instead of 1. I am still waiting for 94 test or 93. But I'm not getting it. We can take out that micro double bottom. It's creating a ledge now, but it's not ledge unless bar 20 closes is identical lows like that with 18 and 19. Bar 18, excellent, excellent. Let's go, 93, 15 solid points. I like to see a little bit breach more than 93 and the low of yesterday tested. If you measure from this here and then stop here and you're in a swing short, you got your 3-to-1. Market could give you the 4-to-1 target. My target is always this trend line. Now I have to redo this a little bit tighter. I anchored it with this double top, micro double top. Might need to be a little bit more conservative. So we could actually move underneath the low of yesterday, overshoot this trend line, but get the 4-to-1. Wow, this is wonderful. Oh yeah, excellent. Aren't you guys glad you sold? There's nothing there, so it's retest of these. Look what happened here. Remember, the breakout needs a strong bear bar. That is a strong bear bar, but it has a small wick. So you know you got in a decent breakout. We're never going to come back to the apex of the triangle anymore because of bar 16 close. That right there is bears immediately started to sell underneath 16, but disappointed, so they're selling at the trend line breakout or at the upper third of 16 and getting a follow through. Now, did we test my 4-to-1? That was a 1-tick failure, but we did test my trend line. It will probably going to come down and give us a clean 4-to-1, but I have scalps already, so I'm good. Now, there's a measured move target to the downside. I took this trading range, but you can also take the whole thing. So we could get a follow through here if we can break this trend line. But I have scalped a lot, so its support still here. But this bar closes on its low, bears will continue to sell. But it's support here, so it's trying to get a measured move target. That's the conservative target, 87.50. But we could bounce here, so I would recommend you guys to scalp as much as you can and then hold the runner into 87.50. So here's what the bulls can do. Is market was down, so take a look at what's going on here. Or down, and spend some time above the EMA, and now we sold right into those lows, and the market could start to pull back up. So I got 1 pullback, 2 pullback, maybe 3, or 1 pullback, 2 pullback, 3. I'm just going to have to go a little bit more. before we start the reverse. So open of the day is tick price could become is magnet for bulls. But let's see. We need a strong bull bar for me to even think about reversing this. I think it's got more targets to the downside, but we need to close below low of yesterday. And if we don't close it, that was the magnet anyway, then we can start the reverse. But that's late rally. We're just so early in the day. This is the support. I took profit here. I am flat. I don't care about any of this. This is still a target, but we have somehow broken this trading rate. I'm sorry, this support. Problem with this break of a support is not all that strong. See that double bottom? We are actually running some liquidity here. So the bulls want to reverse this. What do we need? I need a bull bar. Really strong bull bar here. Inside bar is better, but I need a bull bar. I'm still not all that excited about buying it because market still wants to come down and test the 87.50 most likely, this green zone. I like to be a buyer here, not here, because I'm not so sure if we're going to be able to harshly reverse this back up. So I'm not all that sure. But we could start to close bull bars. That's good news. And then we're probably going to go back and test bar 17 and possibly even this trend line again. But I haven't bought anything. I'm still flat because bears made 20 points. I'm sorry, it is more than 15 points. But the problem here is that it was with a wick, not with a body. So the bears now need to close this bar or the following bar below 93, 50.93. They close a bar below 50.93. They will continue to sell into 89 and 88 area. Might be even getting 87.50. So 87.50 is doable, but I need a bear bar closing and taking out 50.93. So what this is right now is profit taken by bears. They're paying themselves. And the only way to continue this, they have to close below this bear close with bar 20. Market is trying to reverse with the 18 bar. Sometimes you get very clean reversals in the day with the bar 18. Sometimes you only get it between bar 18, 19, 20, 21, 22, maybe even 24. So you might end up waiting first 2 hours close before market actually reversing back up again. So sometime between the bar 18 and the bar 24 we might need to come down and then start the reverse. And therefore, I don't want to buy here unless they show me something really bullish. I'm going to take a quick break and be right back. Okay. 21 is an inside bar, but it's not a strong bar. Now bulls are still bouncing from here, but we need a strong bull bar here. Now, we close a bull bar, and we close somewhere above 97, 50.97. We will go higher. But we don't, and then market will continue to come down. This is why I didn't buy. But 2 bull bars, buy to close. We need a third bull bar They're bears stuck down here, so they're selling the pullback. They want market to come down and test the close of 20, but we might have already started the reversal here, especially if we get the third bar. Taking out the upper wick of bar 22 with a bull body, bulls can buy the next pullback and bring market up to 5,100. So seems like 5,100 is a magnet now. So I'm gonna mark that. Kind of an important price point it has become. A third bull bar. There will be some selling, but it'll be probably a pullback, and then we can get a second leg up if we get the third bull bar here. I did not buy anything, but I might soon. I just want to see if we're going to be able to close a bear bar around 50.93 and lower. Otherwise, I'm going to look for a second leg up for bulls. So this is their chance to, this is bear's chance to close a bar below 93, 50.93. If they fail, we're going to keep selling possibly into 89 and 88 area, 50, 89 and 50, 88. And that green zone is, and that's where I'm going to look into buying. Key price level on Globex is, I did say we're going to test it, and we did. Bear's trying to close a bear bar below 50.91.50. If they do that, we could come down and test the Globex low and make a double bottom with here and then bounce. So it's not 1589 to 5088 is still target for bears as long as they can close a strong bear bar here. Okay, I think they're trying. So you see why I didn't buy? And remember we had 3 bear bars and we were in the 4th bar, and I said it's going to try to come down here. So you're going to have to kind of wait now. Market to test this area. Now, market to test this area. That's the neckline. You can even connect with that, but it's not working out all that good. I'm just going to leave it like that. This whole area, actually, I'm sorry. This whole area is support. But I don't like to take the whole thing, but just we might actually come in and bounce from here. Yeah, we'll see. All right, so the bears did close a bear bar here, which is good for them. And this ended up becoming a pullback. So they want to break this trend line, come down and get my measured move target. And that's a conservative measured move target. I actually excluded, you can even say, no, I don't want to use this, but I want to use this. I'm just trying to see. There's not of a good breakout. I'm trying to. Then measured move would be to the downside. So I'm more interested in 87.50. But why aren't we breaking this? Let's just wait. Because bear's got a good confirmation here with bar 23 closing below 50.93. So 20-point swing is at 50.88. So we just need another bear bar, and then we can continue to come down to maybe like a couple of tick above 87.50, I would say, maybe 87.50 even, somewhere there, before bouncing again. There's nobody scheduled in the afternoon. I might stay a little longer. We get a bull close here, I'm gonna start buying, because I don't like the way the bears are struggling here. Just waiting. Possible wedge, maybe 1, 2, 3, maybe 1, 2, 3. I mean, so many options, but I'm just waiting for the bar to close to let me know, because there's a 20-point swing target down below, not so far away. This could be nothing but a pullback and then sell again. If bar 23 weren't able to close a bear bar like that before 93, I would have already start buying this. Now, bar 24 is really nice. Remember I said we might need to wait from bar 18 to bar 24 before we start to buy. Now is the time I think the bulls started to buy. One tick above 24. Because we have 2 hours done, 9:30, 10:30, 11:30. Can we finally reverse back up? Well, I want to see one more bar. For bulls, target is 96.50. They want to test it and close above it, and then continue into 99.50 to 5100 is magnet. There's an inside bar, 21, nothing closed, bearish below it. So your target is 1 to 1, 99.25 and 2 to 1, 02.75. So but we need a bull bar taking out its high. We get that bull bar close, we will get to 99.25. Failure to get that, bears can still sell this, but I'm not going to sell against bar 24. So that's why I said I need to see one more bull bar. We get that bull bar close on its side above that blue line, which is bar 21 high. Market will rush to get to the 99.25 and then furthermore to our target with stop somewhere down here. Okay, so that's why I wanted to see the confirmation, because this could be nothing but a pullback and sell further down to the bear targets, and a 20-point swing is 50.88. So there were already buyers above bar 24. They're looking for end of second hour reversal, but yeah, I mean, I'll buy, but I want to see a bull bar close above that green blue line. Inside bars create basically trading ranges or triangles. You want to see their highs and lows breached with confirmation if you want to see a breakout. So bar 24 did not really, bar 24 or 23, none of them actually broke below. Wick doesn't count. You need a body closing. We also don't have a confirmation to the upside either, but you see how that's failing? You see how, without the confirmation, how the bulls bought one tick above 24 for struggling? That inside bar is very important, that 21. There's an expanding triangle there, which is also trading range. Okay, you see, from the 21 low and the 21 high, we're right at the apex now. I needed that confirmation, second bull bar. So we could suddenly come down to 38.75. 39 is 19 point. So 19 plus 1 would be testing the 20-point swing zone. That would be 88.75 at the minimum. That'd be nice, but I still don't know. It's a double bottom, is neckline. Bulls want a breakout, bears want a continuation. You already have a double top with 18 and 22 high, lower high. So we need bear bars closing on their lows to get this bear flag commence. Otherwise, bulls will take over this. So waiting for is a bull close above 21 high or a bear close below 21 low to make the decision which way we're going to break out. I think it's going to be bullish now because of this wedges. We are running liquidity for the second time. So now is market will want to take out, where is that? 1-to-1 target, 99.25. So it's just a matter of closing above that blue line. We could finally get some kind of a reversal, could last for like minimum 6 bars, average 12 to 16, and max 24 bars. But it just needs to start. So we came down and test the signal bars midpoint, and bulls still haven't shown me anything concrete here to say I can start gradually buying here. As far as I'm concerned, bears trying still to come down and test this area. I think the 1500 seems like a good place, so I started buying already. Got a confirmation here. So we might need to get up to this area perhaps. But we need that follow through. We need to get above the EMA to say if we're becoming bullish. We're still not bullish. We don't have consecutive bull bars. Yes, we do have a bull close, but look what we just tested. Half R is not enough to say we haven't even tested yet. So we have to actually test and get above this. Then I say, okay, we're definitely going to hit the 99.25. Most likely we're going to get above it, go even further up high. There's a tight trading range and a small triangle here that we broke out from. So this area is target, maybe half, 1.5 area at the best. But I need bulls to get above the EMA. There is a small inverse head and shoulders. So a second bull bar would be ideal for bulls. 99.25, 99 area. See if we can get there. But still, it's bearish market, and bears are still trying to have a hold here. They're getting a double top at the EMA or triple top. 1, 2, 3 so that's basically they see this as a bear flag, but I don't know. They should not have let bulls actually print 24, let alone 26, like that. Those are strong pressures now, and markets could still reverse back up. But if we close another bear bar here, that's just not good. So there was a scalp there, but I prefer more from bulls. That's not enough to say going long was ideal here. Bears are trapped underneath 23. Okay, so They're trying to sell at the high of the small trading range. They're trying to break even. We could still rush up to the 5100, okay? But we might need to get those guys out first. So if you are a bear, okay, sold underneath here, and then you're basically selling above the same bar, say at the minimum, this is your break even right here, that blue dash line. So they're trying to get in there. They're trying to test there, okay? And if they fail, then they're going to be like, okay, we're done here. We're not going to be able to test. This is point of no return. There's a little bit of gap here, and we're going to end up going up here. So we're going to end up, they're going to end up selling at 99.25 or maybe even higher, is because they're trapped. Now they're getting trapped even more. But that's where they want market to come down before it actually reverses. So suddenly we could just dump right in there before going back up. Be careful there, which is the close of 25. So we close another bull bar here, is 99 and 99.25 is target. So it's basically a trap. All right, so bulls did not allow a bear bar close below the blue line. It's the minimum they can do to continue to push this higher, but they also couldn't close a bull bar. It's a doji, so that still doesn't make me feel all that great about going long here. Bears want a low 2, low 1, low 2, but they might end up, I mean, they want to take out the 23 low, but this is just kind of difficult now. So it really is trying to get to 99.25. But okay, let's go. Let's go close. We need to close above 97, a bull bar. Without closing above 97, a bull bar, we're not going to start swinging into 5100. So let's go. We have a good confirmation, but now pull back. We just need to close this bar bullish above EMA. That would be wonderful. Then we can accelerate into the target. Here we go. Let's go. This price action today is just really challenging. Let's go, but still good. I'm doing pretty good, but I hope you guys are too. I was bearish, but then the bar closed bullish, no follow through, and I kind of getting that liquidity run below these lows and a double bottom. So it's okay. I said I'm gonna wait for a close above this line. That's my criteria. So I start buying small. Is as I get more bull bars, I'm adding. Going to scalp around one tick below 99.25. That's my goal, but I need a bull bar closing here above 97. That'll even make it better because then we can actually go into 5100. So 99.25 to 5100 is my target. It's also 10 point for bulls, I think, although I'm not sure. I just have to measure that. Yeah. 950, slightly above is 10, so we could actually go there somewhere between the 9 and 10. So 99, one tick below 99.25, I'm going to scalp a lot. If I can get my hands on, and then I'm going to leave a runner. Bulls trying to show the market that they are trying to create a trend. So that means they're going to have to close above this. You see why it's important here? Okay, here we go. We'll close that. We're going to get to the 9 or 10 point very quickly. We might even go to the 15 point swing. Okay. We just tested the 99, one tick below, so I scalped a lot. I'm afraid I'm responsible of that upper wick. I'm just kidding. I'm responsible of nothing. I'm invisible to the market. But you see what's going on there? I'm just one of those machines that think like the way I think. It's because I think the way they think. Okay, see what I mean? Where I'm going with that? So it's just a one tick is, front running basically, but it can go higher. 5100 is the magnet. Market is trying to actually reach 5102, not just 5100, like maybe 2 points above. It's a trading range, so open of the day tick price is also now the next magnet, but I'm more interested in a 10 point here. Here we go. We're about to tag the 1500. I'm sorry, 5100. I'm going to open the question box on go to webinar. Oh, there's a little question here. Oh, he already left. Okay. How can he post a question when the question box was off? I don't understand. He was able to post a question 10:45 a.m., but I just activated. This is bizarre. It just gets me. But anyway, can we go short after closing 15? He asked. Yeah, you can. But it's just that it's not all that great bar, but it closed below the close of 14. So you can take, you can sell with a stop order underneath. You just have to always expect its high to be tested and then bear sold, so you can even sell underneath 16 some more, so and so. Next question. Could you give more examples of failure? Sure. It's basically what I posted earlier, the chart. But I'm in a trade right now, so hang on. So failure is basically is a barbed wire, whether it's a small or large. Okay, so you have market make it double top, and then make it double bottom, no breakout, no breakout. It keeps coming back to this area, right? So goes back and then finally starts to print 2 consecutive bear bars. You're going to put a stop above the first bear bar and you're going to sell. And you can measure from here to there, okay, a 1-to-1 target. So same thing for the bulls. So market made a double bottom, failed, went back and double top, failed, okay, came back in here, and then bull bar and another bull bar, right? Stop goes here, 1 tick above. You're going to buy 1 tick above, because if market wants to come back down, chances are it's not going to even touch your buy order. And you can cancel, and you start to see bear bars, 2 bear bars stacking at these lows. Then you can sell 1 tick underneath with a stop above. You can cancel this one, go with that one. But stop order, you have to enter with a stop order. So I'm going to show you some examples here in a minute, but give me a second. There are tons. I just have to clean the chart a little bit. Or here what I'm going to do is duplicate a new tab, delete everything here. Hold on. I'm still in a trade, so if you guys just wait a little bit. Bulls taking profit at 1 hour. After this profit taken, they have to close the bar above 1 hour 99.25 and then continue to go higher. So my target is still 5100. This time 5101, 5101, or 5102. Could be even higher 2 hour 0275. So look at here, right? Or look at here. So you have double bottom, you have double top, okay, but it's not really equal, is it? So you can't really say there was a failure to sell breakout. But here's a double top, double bottom, no consecutive bull bars. Oh, here's another double bottom. This one's better. They try to break out, so this is an actual failure. Failure of a failure, okay? So where is the mid? Mid is right there. Oh, look, two bear bars. Oh, that's great. So what do I want to do? I want to put a sell order there. Although it's not all the way at the down below, I may not get that breakout. But I'm going to put a sell stop order. And I'm going to put a stop there once I get filled in. So what happened? This happened. There's no breakout. What can I do? Just cancel it. Or you can trail it underneath here and enter there, but that defeats the purpose. Or two more bars. You can sell underneath here with a stop here. Did you make any money? Well, let's find out. If you sell, if you're really inclined to get in, you would enter 99.50, 98.50. See, that's a perfect scalp, but not for you, for institutions. That means this is still not breaking out. So it's failure of a failure. We don't have a breakout. Plus, this was not closer to here, okay? So you don't know if this is going to break out. But here's what you do. You put a sell stop order. If suddenly you get a really strong bull bar, maybe it's time for you not to sell it. Just cancel it out, okay? So now bulls take over, but where are the consecutive bull bars? We're not even close to up here. So what do you think is happening there? Well, there's nothing there. Or you can look at hold on, guys. You can look at a smaller time frame or smaller micro level structure. Hang on, this is still not. See, they just got the 1R and they're now reversing. Probably buyers somewhere here. Ooh, okay, so it's accelerating down. So that ended up becoming a bear flag, but are they going to be able to take out this low? If they do, we could get a I think they're buyers here. They're going to try to stop the bears right around here. Hold on, I'm going to get back to those examples in a minute, since no one's after me scheduled. This is pretty strong. Bears are trying to take out that low, and we're going to clean this up. They got their 9 point, so they started taking profits. So now they want their 9 point. Bears want their 9 point, but they moved the market more than 5 points. Scalp, they're trying to get a 6 point. That means if you measure from the 29 high, that pivot level, that means we already reached the 6 point, but we have not closed the bear bar. If they do close it, we could quickly come down and test these lows again. But anyway, I want to get back to here. So on a smaller time frame, again, double top, double bottom. Where is the consecutive bull bars to say I can put a buy order there and a stop here and go? Not there. Here are two consecutive. 1, 2, 1, 2, 77, 78, stop above. You have to scalp 1 or 2 points first. I look for 2 point scalps. If I'm not getting, then we're not ready to break out yet. So if you actually sold one tick underneath 78, you would get filled 99, right? So 98 and 97, right? It needs to go to 96.75 to give you 2 points. You got a 2 point there before market close. That was a breakout, right? and even sold more. Look, that's 15 minutes. So from yesterday, right? Where is that? Look, market sold even more. If you actually sold one tick underneath, market sold is 6.25. So that means is if you put your stop entry stop there, look what market end up coming down to. It moved up and then kept selling. Your stop is up here in the first bull bar. Look, that's a measured move target before reversing back up. Bears got there. In fact, you can also put the right there. That's your measured move. So add for one tick and one tick above, one tick below, before reversing. See, even into the after hours, you were able to get a 1-to-1 target there, which is great. So that worked out, but who's trading that, right? So at least there was a 2-point for you before market closed. Let's take a look at other examples. Double top is double bottom, right? No consecutive bull bars. We went right back to the midpoint. No consecutive bear bars up until here. Stop goes there. You can get your you can measure it like this. That's 1-to-1. But I like to measure from the structural point. We could get the half. Yeah, we got the half R, but it's not enough. But still, if you put your stop above there, a little bit above and low, that's your 1-to-1 before reversing back up. So here is bulls, failure over failure, swing, right? But I need 2 consecutive bull bars. Got nothing, got nothing. Ooh, I got this. So I put a buy stop order above. Did I? Now, what do I not want to see? What do I not want? If this is my 2-bar reversal and my stop goes here, I do not want this bar's low to be taken out, because if my potential stop positioning area is violated like that, that means bears might be trying to get a breakout to the downside. So look, 2 bear bars, stop goes there, but sell stop goes 1 tick underneath. Did they get entered into trade? No, not yet. But bears are now, well, the potential breakout, we kind of killed it for bulls. So let's go get our breakout. So now bears are watching. They're already piling their sell stops underneath. That wick doesn't make it any better, but it's closer to this low. So we could actually suddenly get a breakout with the stop above, and we could get a measured move target suddenly. So there are sell stop orders now underneath 31. Bulls got there. They don't have to get 10 point. It starts profit taking starts at 9 point. They actually got is 9.5, I think. No, they got 9 point and an extra quarter. So bulls actually made money is here if you're counting points. So bears, on the other hand, trying to close below 6 point, which is 93.75. If they close a bear bar below 93.75, they're going to go for 90.75 to 89.75 area. But they have not closed anything to say that they have a bear trend here. Okay? So the bulls are still holding market. They're still in charge of the market. So now they need to bring the price back up to the 29 high and then get back to making money to the upside. If they fail and the bears close bear bars, that bull trend will be eliminated. And there will be a lot of sellers underneath bar 31 low, wanting to enter and looking for a breakout and a one-to-one target minimum. Well, I'm reading ES, so I don't know MES is, micro is, I'm sorry, I don't know what's going on micro. I have to look at it. So when you post something, I think of it as a ES reference. That's okay, no fault. No one is at fault. There's only one tick slippage, so between the ES and the MES, maybe two at best, but generally it's one. Bulls are stuck up there, is above 28 and with 29. So they're trying to close this bear gap. They want to get back to the 30 lows, but this could be point of no return because bears started to pile up underneath 31. But the problem with that is that it's not close to the low. So any breakout here is selling. I mean, you're basically selling into support. Okay, so I don't know how far this is going to go. They could be now selling underneath 32, but still there's no bear bar closing below the 6-point mark, which is 93.75. Bears need to close a bear bar. If they fail, bulls will take over, and we're going to go right back up. Now, you have an inside bar here, so they got a 2-to-1 target here. If this is good enough for bears and they get out of the way, we could just go right back up. So this means if bulls actually close a bull bar at the high of an inside bar 32, their target is going to be, who's going to tell me what's going to be that target? Let's see if you guys are getting my jive here. What will be their target if they can close a bull bar above the inside bars 32? What would be their scalp target? No, I need exact price point. Somebody call 911. These people are clueless. 98.50. 98.50. Well, you were close. Jazz. Fluff. 98.50. Yeah. Yeah. No. You just say the exact same target. If I want to front run it 1 tick or 2 tick, that's my call, not yours. But good try. Yeah. But that was good. I'm 1 tick front running. Didn't you say that? Good try. So markets see several is 1, 2, and 3 double bottom, higher low major trend reversal is, or even nested wedges 1, 2, and 3 double bottom, lower low major trend reversal is. So they're trying to get back to these highs, but they need to really first rescue these bulls. Is anybody who bought here, maybe they bought the close, they already break even, but really the bulls are actually stuck up there with the close of 29. So is anybody who bought at the low of 27 or lower third of bull bar breakout 26, or I generally base on the open. So these bulls actually got a average break even, but they want market to get back to the 29 high. So the moment that this bar actually closes above that dash blue line, first they're going to try to get their 1R, 98.50. They can even actually this time push all the way to 5,103/4, which is 2R now. But first we need a bull bar closing, because failure to close a bull bar above this line we're not going to get up there. Okay, so but we close it, we're going to try to get back up to that line. Okay, I think there's a slight close, so they're now trying to buy that close. Yeah, I mean it's barely there, but it's there. So there is also wedge here and a falling trend line. Bulls want to test and break above. I deleted the wrong one. Oh, here's the wedge. Bears want to break from down below. Bulls want to break above. They want to test this trend line and break above. So we're smack in the middle of this wedge formation. In order for us to become bullish, we really need to close above 50.97. That has been my criteria for some time. We failed here. We're trying again. Today can be stuck in a trading range as well. Came down, made a low, now making some kind of a higher low. But we could go up to these highs, which is open of the day tick price, but then we can come back down again. So, but if we do close above 97, market will push further up to 5100 and 5101, 5102, 5103. So looking for a decision here. Where will this wedge break out from? Might be even this. Just trying to do a better job there. There we go. That's better. We closed above that, and some bulls are already taking the bait and like, yeah, this could actually extend down because of that measured move, and we're just going to take our losses or minimize losses or no losses. Well, they're definitely taking a loss with whatever that contract that was up there. So it's going to reflect onto their P&L for sure. But this bar hasn't closed. But if it closes the way it closes below that dash line, bears can still sell this because they got kind of stopped there here. Remember, this was their 6 point. That's 550. That was the 6. They made a 6-point run, but they couldn't close a bear bar. So they sold that probably, or they sold into profit taking by bulls or average price breaking even, and they're trying to get back to the 6 point again. But this time they close a bear bar, they will get to the 10 point. But I don't know if the bulls are going to allow, because this is possibly a trend reversal for bulls. That's how they see it. So I need now, bulls really need to close above 97, 50.97. If they do that, that's great. I'll pile on buy orders, and I will wait for them to reach 5101. But it's just not getting there. So now we have a gap bar here. Bears want to take out the 23 close or the 24 open and keep selling, resume the trend. Bulls want to target bar 28 open and close, okay? We close above that. We're going to go and test bar 2 from today. So, okay, is bar 2 low bar 2 close, bar 2 open or high. And if we take that out, we could be in a swing. So we have to not only test the bar 30 high and close a bull bar, we have to break this falling trend line, squeeze out of this wedge, and then go to the bar 2. That's great, but it's not easy. So between the bar 30 high and the trend line, open of the day tick price is also magnet. So the bulls really need to close a bull bar here if they don't want to allow bears to break out to the downside. Because potentially bears can still sell this. But they failed with 33. That was leg 1 pullback, possible leg 2. So now for bulls, leg 1 pullback, leg 2 they're trying to get. So bar 30 high is your magnet. So I'm going to see if I can get them test bar 30 open and high and close a bull bar. And I'm going to scalp there a little bit, and I'm going to leave a runner. I'm in, but with a, managed risk, I don't have confirmation. But the moment we close above price point 50.97 is I'm going to pile on the orders by hitting buy ask, or buy bid, whatever I can get my hands on. And the bulls is close the bar above the inside bar, 32. They want their at least minimum scalp at where? 98.50. Exactly. Chaz, 98.50. Good job. Excellent. Bar reading is everything. This is why there are 4 books written about this, okay, by Al Brooks. The bar by bar, the trends, the trading ranges, the reversal book, okay, the trilogy. Read them. I mean, he goes through bar by bar, everything. And it's kind of repetition too, which is great because you're learning the same thing over and over. It's going to stick. Trust me. All right. I just scalped here. And I'm holding now possibly 5100 is, but I really would like this slight gap bar. There's a little bit of gap you see from the close of the bar to the EMA. Is I want to see bulls actually take out the 29 high, 30 high is, and close above the trend line. Excellent. Scalps, and I'm having a runner now. Let's see if it's going to be able to run this time. Because I don't want to see a double top here and a bear flag suddenly selling. I think it's that ship has sailed, but still this area is problematic. So where the market is trying to go is here. You see that? This area on the, we're going to reach there probably. I don't know. Can you guys actually see this very faint gold box that I just put on the 15-minute chart? Is it visible, or do you want me to change the color? Okay. I don't want to see a double top here because it's also wedge 1, 2, 3 wedge top. And the bears want a reversal back down. So that's another reason why I scalped there, because it's not guaranteed we're going to close above bar 30 high. But so far so good. So I like to see bulls get a follow through here. Now, let's see. Into 51.01, the minimum, and then a breakout into 51.03. So here are my targets. And then 05. And then if we can really accelerate, I mean, that would be there. So I want all of these to be gradually tested and hit. Hopefully we don't get a double top here. So what happened here? Let's talk about the failure of a failure. It's failure to break out to downside, failure to break out to upside, and it comes back to the middle. So what am I looking for? I'm looking for 2 bear bars. I found it, but it's so far up in the middle. Nobody wants to open a trade in the middle, but you can put a sell signal order right there. However, what happens when the bulls are taken out where the stop potentially supposed to be for bears? Well, you're going to cancel it out. You cannot sell this, okay, by bar 33. You should have kind of already gotten the hint. So now what are you looking for? Well, you're looking for 2 bull bars to break out, right? Up until here, it's nothing but a scalp. That's why I scalped that target is pretty strong. But I still have a runner. I'm hoping we will get that second bull bar. And if we get that second bull bar, where am I going to put my stop? I'm going to put my stop underneath 35. Say this bar 36 is the bull bar, bull close. Then I'm going to look for a measured move somewhere up here. So it would be ideal if bar 36 closes bullish, then we would get a failure, much bigger structure. Failure of a failure is swing, and we might have already started the swing. So now we didn't get that confirmation. So this is really dragging today's price action. Let me tell you, these people are like, whoever's trading this on a Monday, I think they're still in the staff room deciding how to trap people around. Tomorrow will be a better day. So, but I still have a runner because I finally did buy, because that was my confirmation. Sorry. You can also look for this, but that's not how I roll. That's an outside bar, inside bar combo. So that's the target, but you see 51.03 and 0275 adds up nicely. So the outside bar, mother bars, 1 hour or measured move is right around there. But I'm going to be true to my measuring because I'm conservative. So here, that's the next target, possibly, or a little bit higher. So I'm still holding this runner, but it's only a 1 contract. In case there's something funky happens, we get a double top and a swing down. You know, I'd rather to be in and losing I'm not losing anything. I'm with this contract, $125 up. So even if it starts to come down, I can always exit out and make like $12 or something. No big deal. But it's just I'm holding. It's better when a situation like this, you're not so sure, and suddenly we could get a double top there. You want to be in the market with a controlled, managed risk, which is 1 contract, not more than that, especially if you have a small account. You can always add back if it's going your way. If you get the what is the confirmation? So if I get the confirmation, how can I add more? What is my confirmation? What am I looking for? Who's going to tell me? What is the confirmation I'm looking for? I just pointed out, said it like 100 times. I even took profit there. No, that's not it. We're reading bars. No, not the trend line. Not the 1 more bull bar. That ship has sailed. Bar 36 should have been a bull bar. What is the confirmation? Yes, Pierre got this. Actually, Pierre, you're wrong. I'm looking for 29 is not the gap bar, although there's a gap, but the true gap bar is the 30, but you're very close because I did say 29, so you probably remember that. But really it's the 39 is, I'm sorry, 30. Bar 30 is the gap bar. So I need bulls to actually take out the gap bars open or it's high with a bull close. That would have been my confirmation. Since you're not getting that confirmation, there's always a chance of is market reversing back down with a double top. So you know what I did? I exited. I took profit with that. I'm not messing with this because we're still below this. We don't have always in long yet. Okay, confirmed. So I took I'm flat right now. Now, if they give me the confirmation, I will pile on, and these are going to be all my targets. Otherwise, I just, you know what? I'm taking my money, and I'm just going to sit back because these guys definitely failed right there with 36. That 36 should have been also, that's the second confirmation. So those who actually said the second bull bar is correct, but we didn't get the second bull bar. So what is my actual? It's because the gap bar highs are not taken with a bull bar. Look, why did we go up? What is the gap bar? This is the gap bar, 2024. So did the bears, they tried to come down and take the open. They failed. They tried once, they tried twice, failed, and the bulls took over. Now, where's that gap bar? That gap bar is there. When I was reading the gap bars, I didn't understand what was being defined there, what it was being said. I didn't understand. I was like, I must be slow, or, you know, I'm not really getting this. And I started staring at the charts, and I started looking at the behavior, especially in days like this, okay? It can be fun trading, but you have to set your rules. Take what L is teaching you, and then make it your own. So once I started to say, okay, I understand what a gap bar is, but I don't understand the behavior. What am I looking for here? Then I started to, okay, so I marked the range of the gap bar and I extend it like this. I started doing this exercise, okay, all the time. So I'm going to do this right now. Here is the last bar that made the gap, okay, can markets stay bearish? How can it stay bearish? It needs to take out the close. It needs to take out the close with a bear bar. Then the market resumes the selling. Otherwise, it could reverse either at the high, look at the high, came close, kept the gap, and then reverse. Bears are trying again, failing, bears are trying. While these bears are trying, bulls are also buying into failed tries. Why? Because they want to go back above the EMA and test the gap bars. So here's a gap. Here is that range. So I marked that. Look what happened there. Look, they try to come in, but how does this need to become a lot more bullish and a breakout? Bulls need to go and close right there. Did they? No. So what do you think is going to happen? That gap is maintained. We're coming down. So what do we need to do to become bearish? Where's the last gap bar? Well, there's this one, and there's that one. There's this one, 60. There's this one, but this one made, I would say 60 and 69 from yesterday. Now, what do they need to do to sell? Well, they need to take out the open of 60, which they did, but they ran out of time. But if you actually look at the ETA chart, they kept selling into the close. So the bears actually resumed the trend after hours, which is Sunday, 6 p.m. open, right? So they sold, if you look at the ETA chart, which I demonstrated, see? And that's because they took out the gap. Also the 69 but this one's lower, so I would take the body of 60. And so you should know right there. Now what's the next? This, 21 open, I'm sorry, close. Once the 21 close, which is 50.95 taken, so you should stay in the short, okay, and look for a wedge formation. And I can prove it to you. Once I started seeing those, I'm like, oh, that's the name of the game. That's how it yo-yos from one side to the other one. So here is the 5-minute chart. Here's that bar right there. Here is, look, they took out with a bare body, right? And then it goes back up. But doesn't matter. It's now resumed bear trend. So stops are up here. So maybe it was there, move down here. Now it's gonna, pulling back. It's entering limit order sellers, right? So what does it want to do? Bulls want to go and close gaps. Where's the next gap? I don't have, but here's one right there, right? They want to go up there. They're so far from it that this is a bear trend now. So we're gonna wait for market to maybe come back here. But if you actually sold this, it's kind of dangerous because you're kind of selling into support here. But it kind of tells me if I sell here and get trapped, look, they trap. Bears actually trapped. This is going to happen. What are you going to do? Well, you're going to go mark maybe some kind of a gap bar, maybe that, maybe there. You're going to look for pullbacks. Or here's a gap bar right there, this big gap bar. And you're going to look for, you can measure that gap bar, only the body, and wait for pullbacks before selling again. Right? Here is the, sorry, that's not it. Got the wrong one. ATR. Here. So where are the sellers? If you're stuck here with that wick, you sold it, right? You sold because conditions saying they kind of showing you that this is going to sell now, maybe looking for a measured move. So you sold it. Whatever, you sold at the support, but you did. You were committed, you sold it because you're looking for a resumption of the trend. You are not wrong. But the problem here is that where does your stop go? You cannot put your stop here because we did not take out that low. So this isn't a true breakout. It's just a resumption of the trend, maybe, okay, commenced, right? It's happening. But where's the stop? Stop goes right up there. But, okay, you have to sell again. So here's a gap bar. If you measure it, look, this is the 0%. What is it? It's the breakout, 0% or 100, whatever. And a little bit up, you could put at the 66%, you could put at the 50% sell orders, whatever. Say you put the sell orders there and waiting happily, okay, I'm going to sell this pullback and I'm going to break even in case this actually reverses back up. It's a double top, higher low reversal. I will have a chance to reverse. You never got filled. Maybe you sold here and got filled right there and you cancel those out. And the market immediately sells. Look at this beautiful trend resumption. So now you're making money. Market will give you an opportunity to resell. Maybe you didn't sell here. Your limit order sells were up here, 66% or 50%. You didn't sell, so you're still stuck here with one contract. You never have to add to your losing position. They came right back, and now you're making money. So anyway, wanted to prove my point there. And that all happened on a Sunday evening, so everybody got their money. Even if they were stuck here into the close and holding, I'm sure everybody was sweating through Friday evening into Saturday and the Sunday. Like, did this just reverse? What's going to happen? Doesn't matter. Sunday evening, it opens up. They get their chance to enter with that gap bar. They didn't even have to. It didn't have to go to the 66 or 33% or the 50% pullback of the SPAR's range. They were right to enter here. They just had to wait a little bit. So what is the moral of the story here that I'm trying to say? So what I do is I study the course, the video course, and then I go back to the books. Okay, books are like I'm in my master's class or I'm having my PhD, And you go through those chapters, corresponding chapters to whatever the subject you're studying. And then you go back to the charts and you make sense of it. Don't trade it. Don't trade. Because I think the biggest mistake people do, I just read a paragraph, so that makes me a good trader. I'm just going to go sim trade it. No, that's wrong. You're supposed to read the paragraph, watch the videos, go back to the charts, find exactly what L is describing, at least 10 times minimum, and then go back to the sim and trade it. Don't rush your sim trade even, because trading consumes you, okay? Because it's addicting, it's going to consume you. And more you make mistakes, more you're going to spend time in sim because you're now stubborn. And you've completely forgotten what you learned about the books and the video and the charts because you didn't spend enough time on the charts, just looking and marking the charts. So when I was making all those mistakes, I went back. I said, I need to understand this gap bar and the behavior around it because I want a trend resumption or absolute reversal. If the reversal is not setting up, hence, there's a small gap there. We never closed above it. So now I can say, I was wrong there, and I can exit out with my runner without losing anything, and I can reverse it. Now, anybody who sold 2 bear bars, anybody who sold underneath 37 and put a stop there, where do you think they're going for? They're going for their target, 1-to-1, 93. All right, so, yeah, buddy. So look, now they're taking profit. So if I weren't talking, if I were looking at this, I would have already sold is underneath this bar. Failure, clearly a breakout failure with bar 29. Failure, okay, first failure is here, bear breakout. Okay, first failure. Over failure is swing. They tried once. Another failure, okay? So now you can look to sell. But what about here? Can we get a failure here? I don't know. Right now I'm committed. I sold, so I want to take profit at 93, right? So somewhere there. I don't generally add those 1 ticks because I'm conservative. I just want to put it right there. Yeah, it's 93. So it's coming down to 93 probably. But what if we get another failure there? So failure over failure, can we reverse back up? Is there a gap bar there? What's going on there? Other than this being a target, what's the gap bar? Well, this one's higher than this. So bears are trying to have a resumption of trend. They want to test somewhere. What do they want to test? Either the 23 close or the 24 open. Okay. So since 1-to-1 comes before, I generally like to take profit as it comes closer, and that's many machines doing that. But since this is what they want to go test, you can always leave a runner to see if it actually goes beyond 93 and this area. If they start to close bear bars, then you know it's probably going to want to go to 2R. So, but first they need to get their 1R. Now, here's the reason why we may not get the 1R. Where did I sell? Look, failure over failure is swing. But look, it's the midpoint. I kind of sold closer to the midpoint above the 50% of this entire trading range. So I sold here. This is still my target, yes. But look how far above I sold. Now, I don't know if we're going to get a breakout. I like to see breakouts somewhere here, right? So they tried and tried. Finally, we're getting a squeeze and a breakout. It's good to sell up here, but you have to take profits. You should still hold it. 1-to-1 should be always your target. And then this gap bars open should be your target. And if they start to close bear bars, then you go for 1.5 and 2R. selling early is obviously better. You want to sell higher, better price, so you can make money. And that was a good sell because so many failures, bulls are not getting their breakout. It's going to go the other way, and that's your swing. Okay, I haven't looked at the questions here. So we have a double top. Is low 2 is bear flag. Bears are selling. Is the question was asked, can we get a second leg? Is sideways and up. Only if we were to actually taking out this trend line, we utterly failed there. So we might still go back, but if I actually see, I don't like the way. Okay, here. So I anchored it to that high and I got the body, but I'm not overlapping with the body, so I'm still accurate. So we just tested there, so coming down. There's a wedge bottom. Bears want to break this wedge bottom. So if we take out the 24 open with a bear body, we might bounce, but they could sell still. Like a similar thing happened on Friday into Sunday. The question was, would you consider bar 24 to 29 a bear flag? Well, it kind of is. I did say that. And I was actually saying this could become a bear flag, but it needs a third push. So here's 1, here's 2. So we needed to do that. We couldn't get above it. And I also said there's probably a double top here. Failed to sell. It's going to go and test above it. But bear flags, you need a wedge bear flag. This is a double top bear flag. So here's the neckline. They broke the neckline, but they're having a hard time selling. Why? Look at this. Look what they have tested. That one's already taken out with 23. And then since then, we have another gap bar. So maybe take that one. Bears trying to close below this gold line or gold box. What happens if we can't? Or are we from this? 93, 25. It's a 1 tick front running. The 1-to-1 target. 93, 25 to 93. But I think they're going to want to test that 93. It's, machines will always front run it. 1 tick. But we came so close, and this is low 1, low 2, or low 1, low 2, low 3. But it's a double top above the EMA. So it is a bear flag. Can the bear flag be invalidated? Well, if we don't take out this right here, this price point, we could suddenly reverse. Okay? Because technically, this is a lower low, higher high, higher high. This is still higher high, but it's equal. Bulls can still show up, but I would need. Now this is actually a kind of a reversal pattern. You see this reversal pattern? We need huge bull bars and a break. Okay, we go above this briefly. We come back. You buy that. And then we test every single one of these. In order for bulls to show up, we have to trap the bears first. So, are we trapping right now? That's not a good sign. Bar 40 is a doji. But it tested 39 low, which is good, but we need a strong bull close above 40 high. So could this be a midday reversal? Well, these bears didn't even get their 1-to-1 yet. So at least we have to give them a chance. And there it is. So now they're going for the gap bars open and close. There are 2 of them. Just pick one of them. Since this one's lower, that makes the bull bar the gap bar. Bears, if they want to keep selling this further down and squeeze out of this wedge, they're going to have to close a bear bar below 92.25. So I guess what I'm trying to say is that watch the videos, read the book, go to the charts, make it your own. Find the same price action happening over and over. And then things will make so much sense to you. You will see the failures. You'll be like, oh, I was wrong. What's supposed to happen didn't happen. Let me take my marbles and go away because this sandbox stinks. So you were long, you take your money, profit, exit, and then you can even reverse and go down the other way. So, yeah, sure, I can show you that. Hold on. I need to see something. Okay, not bad. In the course, can you show me how to find where all this is? That was a question. Gap bar. Wait a minute. That would be, I don't know. I'm gonna have to look. Maybe here. No, that's not that's intro. I think maybe chart analysis. Here, gaps. What are gaps? Moving averages. This is it. This is where you learn all the micro gaps. And then you go to market cycle. You learn about that, which adds on top of that. Okay. But you really first need to understand is all of that. So it's understanding the candles, how they set up, what the signal bars is, and the EMA gap bars and all that. So hopefully this helps. Okay. Next question. The question is, how is your insomnia? Does it correlate with your trading P&Ls? Oh yeah, it does. When I don't get good sleep, I do trade badly. I read the price action well, but I don't get the performance I'm looking for. So I started taking magnesium pills with D3. So I'm taking that half hour before glycinate that I'm taking. Half hour before I go to sleep I pop 2 and I sleep like a baby. So, and I wake up, I make my bed, I wash my face, whatever, or take a shower, get ready, feed the cat, dig for gold in the litter box, and get everybody situated with their breakfast. And then I come in and start charting. So I'm good. But if I don't sleep well, I know it's going to reflect onto my performance. Look what happened with the bar 41. Did they close a bear bar? No. But did they take profits? Yes. Did we test the 92.25? Yes. But where's the bear bar? What do you think is going to happen? If we start closing bull bars, we could reverse right back up. But you need the bull bar. You cannot just buy it. You need the bull bar closing. Okay, micro double bottom. You want to see a nice inside bull bar here. But if you don't get it, bears can still take out the 92.25. But that's a sign bears could fail only if we start to close bull bars. So you don't just untimely start buying just because we didn't take out 23 close or the 24 open. That could still happen, and we could get a 2-to-1 target for bears who sold underneath bar 20, bar 37. But thank you for asking. I'm doing better. 2 times last year, I was losing in my dream. This is bizarre. I don't want to raise the hair back of your head here, but it's back of your neck. But I saw, and the same day I've lost. I actually even lost. I was trying to do like evaluation accounts. I lost evaluation accounts. And I was literally trading in my dream. I bet you guys are getting that too. And I literally lost. So I pay attention what I see in my dreams. I'm trying to take popping those magnesium pills. Hopefully I don't ever see those dreams ever again. Yeah. How cute. So, okay, I am done with my session, everyone. Market is trying to resume the trend. And if they actually finally squeeze out of this wedge bottom, your magnet is 1 hour EMA. But let's take a look at the hourly chart. Went up is, right, we came down. We're trying to close a bear bar. That's a bear flag. Right there is market could reach the EMA. In fact, where the EMA is, there is a gap. So buyers are here inside this gap, but we might need to reach there before, and then we could end up down, up, down, up, down. The wedge bull flag before going back up. Tomorrow could be a bullish day, but we could test these highs again, okay? I think the market is trying to come down at least into this gap area, this gap bar. Buyers are waiting, but we might need to squeeze out of this 5-minute wedge first to the downsides and then gather up some buyers, but I don't know. So we haven't really taken out this 92.25. That makes me nervous for bears, but if you are still selling, you should be holding on to your sell unless we start to close bull bars. Now, you get an inside bar. If we start to close bull bars, suddenly we could find ourselves right up there, because this is a wedge, double bottom, or lower low, double bottom, major trend reversal still. And this is still a reversal pattern, okay? But we need bull bars. I need to see strong bull bars. Those are going to be my, okay, signal. We can still get back up to all of these levels, but I'm not going to buy anything, especially with a bar looks like a doji. So bar 42 is not ideal for me to buy, okay? I need a strong bull bar. We might need to come down more and then trap the bears right here and then reverse back up. But all I know is that the bears are trying to still resume the trend down and take out this 92.25. So if you're still selling, I think you should still be holding this at least a little while until you see a strong bull bar. So there's still room to downside here. Animal patterns, dolphins and fox. All right. There's a 5-year note sell-off auction happened. So that accelerated the resumption. And we now have a new low, okay? But we could trap the bears suddenly, so watch out. We're breaking a trend line, okay? We might come down. There's a gap here. This gap is important. I'm going to say from here to here, buyers is probably in this gap. See how that works? The resumption. See, we came down and clean this up is a little bit. So they're still going for 2R. Oh, look, that was a 2R. Duh. Look at that. See, selling. Failure of a failure is, even the second time they try, is failure. No consecutive bull bars. Anybody who bought here, or they tried to buy with a buy stop order, never got filled. They saw where their potential stop area being breached, so they're not going to buy again. Anybody who saw 2 bars, they put a sell order, okay? They saw their stop is kind of getting breached, potential, they never entered yet, but that never got breached. So technically, you can actually sell now. If it was to go up, then we would have gotten a bull bar. I would have bought that. We never took out the 30 high. Okay, so if anybody's actually sold it, they sold again at that high and made money. Retail traders will look for 2 bear bars. here's their chance to get in, is with a stop above. They go for a 1-to-1 and they got their 2-to-1. Okay, now you're done. Exit out of your trade because this is trying to reverse now. So we tested the gap area. We broke the trend line. Is this bar closes bullish, I need a good bull body and a follow-through bar. I'm not going to buy this. I want to see the bull body. But once I start to see it, I'm going to buy. My target is going to be the trend line, break above the trend line, and possibly these levels that I marked. They're still valid for bulls, but I'm not going to buy it because bears can still try to close this gap right here. So this bar closes bullish, then I will buy. But I want to see a really good bull close. You all have a great day. Tomorrow is going to be Tim Stout and Brad Wolf. I come back on 28 morning and 29, and that's it. So, and we'll close the month of February. Bye, everyone.